Thank you, Emily. Thanks everybody for being here today. We appreciate your attendance, especially a couple days before the holiday. Seems like we have been regular friends on webinars as of the last few months. And while we enjoy reaching out and having the opportunity to work with you, I don't know about you, but we're ready for not having more PPP changes. So again, there's been a number of significant changes that have happened, and that's what we're going to focus on today. So as we get started, just a reminder that this information is subject to change, and it's as of right now. There's information that just changed again last night, which we'll talk about in a second. So it's continuing to evolve. So keep that in mind. We are obviously not lawyers and we're not providing legal advice. And the things that we're talking about here are general ideas and considerations because there are so many nuances that apply to each organization differently that you may need to talk to one of us specifically about your organization. So first, a little bit of information about what's been going on. The one I mentioned that just changed, literally as the sun was setting and the PPP application deadline was going out of existence as of June 30th. They came in and said, okay, let's extend it to August 8th. When I looked this morning, the SBA website still even had that it expired. They would not be taking applications that expired June 30th. So that's how fresh and new it is. Right now, it's still subject to being going through the final process and being signed by the president and passing the House, but that's likely. So if you are on the call and have hesitated, you still have an opportunity at this point to apply. There's still over 130 billion available, or pass it along to any of the networks that you work with if they have not been able to apply. As Kate said in an earlier webinar, the banks are not anticipating having this probably ready today because it was done at the last minute. So I'm sure you won't be able to apply today, but you do have now till August 8th. It's been a very significant program, as these stats show. There's over 4.8 million loans that have been approved, and an average loan size that's given there of 107,199. So it has been something that has been helpful to the economy during these unprecedented times, but it's also come with a fair amount of extra work and documentation and understanding. One of the things that had been being questioned was whether or not the information was going to be released as to who was borrowing the funds, because they were federal funds. And that recently came out that there will be a release of borrower information. That information will be disclosed, or the information that will be disclosed is the borrower's name, general information, their code, the NCIS code, the loan amount, unless it's less than 150, will also be disclosed. Loans less than 150 are going to be aggregated into a zip code kind of presentation. So not sure yet exactly where this will be housed. Maybe it'll be out there by tomorrow, likely on the SBA website, but don't have an exact web address at this point. But you will be able to look up that information. All right, so since the last time we were together, obviously on June 5th, the president signed the PPP Flexibility Act, which made a number of changes to what we have been spending time on in the last couple of months. And Kate put out a great blog differentiating some of the key things at that point. So we did not do a webinar until further guidance came out, and we've had quite a few additional publications and questions answered at this point. So felt it appropriate to go ahead and talk about these things, as well as the new application forms are now available. So we'll go through a few of the high-level changes here and dive more into specifics as we go along. Officially, the loan proceeds were originally available through June 30th, although that was questionable as to that you had to use them by June 30th. That was the application deadline. Now, obviously, the application deadline is potentially going to be extended, and it is clear that the funds have to be used no later than December 31st. The earlier of the end of your covered period or December 31st. The forgiveness period still has an alternative period if you choose it, but the big change here is that it goes from 8 weeks to 24 weeks. Now you can stay at 8 weeks if you got your loan before June 5th, which was the date that the Flexibility Act was signed, or you can opt into the longer period. There's pros and cons potentially to doing either the 8-week or the 24, and you are not limited to just those choices. You can apply for forgiveness in between those periods, and we'll talk more about that as we go along a little bit. One of the things to consider though with the 8-week, if you're eligible for that, is if you are able to max out your loan, especially with the new spending ratio that we'll talk about in a second, you may want to just do it so that you can have less documentation that you need to submit. And if you can maximize the loan out now with the flexibility on an additional 15% of other costs, it may just be the most effective way for you to do it. But you're not required to do the 8 weeks. What's interesting, in the original act, there wasn't a specific deadline that was given for submitting the forgiveness application. Now it does specifically state that you have up to 10 months from the end of your covered period to submit the application. So that means that if you choose the 24 weeks, you may not be applying for forgiveness until into 2021, potentially. One of the big things with the original act was that 75% payroll that was added on, not part of the original legislation, but added on as part of the rules around it. The intent being, according to the title of the act, that it's around payroll and restoring payroll. That was loosened in the Flexibility Act a little to be a 60% ratio has to now be spent on payroll for full forgiveness. Now, there was question when the Flexibility Act first came out whether that 60% was an all or nothing type of thing, where if you didn't spend at least 60, you lost forgiveness. That's not true. It's the same situation as it was under 75. If you incur less than 60% of payroll, it's going to be proportional your forgiveness. So you're just not going to get 100% forgiveness. You'll get a proportion of it based on the proportion of payroll expenditures. Penalties, two big areas, and we'll dive more into these as well, relate to the wage reduction and the full-time equivalents, or FTEs. The original act, you had until June 30th to rehire employees to the same level that they were at February 15th to avoid any penalties or reduction in your forgiveness amount. That would probably be a better way of saying it. Now you have until December 31st to rehire and restore salaries back to that level to avoid any reductions for forgiveness. And we'll talk about some specific safe harbors here in a second. The loan term, original loan term was 2 years. And if you got your loan prior to June 5th, when this Flexibility Act was signed, your loan term is still 2 years. You can agree with your lender and work with your lender to get it to the 5-year period, but it's not an automatic. So loans issued prior to June 5th are still 2 years unless they're renegotiated. Loans after June 5th are now a 5-year loan term for those disbursements. And then the last one, as Kate mentioned earlier today, we kind of hesitate as accountants to put this on the slide because if any of you have heard me speak in nonprofit world before, or especially with board responsibilities, a big one we emphasize is delinquent payroll taxes and the responsibility around that. So generally, it's preferred that you never defer payroll taxes so that you don't open a door to any potential problems. But it is available under the Flexibility Act. The original act did not allow you to have PPP and a deferral. The Flexibility Act now permits that. But again, it's not advisable. Now, these next two slides are just straight from the instructions for the new application. But I know a lot of questions came in with the things that were submitted in advance around FTEs. So I figured it was best to just put the information right here so that we could talk about it, and plus you'd have it when the slides are sent out versus having to go back and look for it. Under the Flexibility Act, there's two broad safe harbors. The first relates to and extends, you'll see that period to December 31st, and includes now making a good faith effort to operate, but maybe not being able to. So if there are guidance or issuances from Health and Human Services, Director of Centers for Disease Control, or OSHA, and you cannot restore full employment, you now have a safe harbor around that. So as we've seen, some of the restaurants and bars and other establishments like that start to open up again. And in a number of places around the country, we've now had to pull it back and scale it back because COVID cases have increased. So this safe harbor was intended towards that, the fact and recognizing that this may not be as short a term condition as originally anticipated, and therefore giving some more time and flexibility, as in the name of the act, around being able to restore employment. The other safe harbor is restoring full-time equivalents back to their pre-COVID period, which was defined at February 15th, and restoring that. The restoration date is now December 31st to restore your FTEs to their pre-COVID level. Now, the one thing to take into account there when you're considering that 8 versus 24 weeks is what you anticipate potentially for restoration down the road. So again, just additional considerations, and you may want to talk to your in-house financial advisor, treasurer, controller, outsourced accountant, advisor, whoever that may be, on what's going to make the most sense for you. There's also a few, and we've talked about these before, but again, it's specifically in the instructions for Schedule A worksheet. So I figured I'd add it here just to clarify that when you're putting those employees and FTEs in the worksheet, there's some exceptions. So if, for instance, in this first one, you made a good faith offer to rehire somebody and they decided not to come back, then you can put them in there as though they're still there and not a reduction. These are though, if you were unable to rehire, if that position was filled by somebody else, it's a moot point because we're counting by position here, not by individual people. So these exceptions only come into play when you are unable to fill an open position for one of the causes here. So again, voluntarily leaving the organization, being fired for cause. Some people have voluntarily decided to reduce their hours. These are all things that are beyond the employer's control and therefore are seen now as exceptions and do not require that reduction in FTEs. The new application looks a lot like the first one, but there's a second form. So now we have 2 forms instead of 1. The standard form still has a schedule and a worksheet, and the schedule and the worksheet are designed for calculating those FTEs and potential salary reductions. The EZ form takes into consideration that for some employers, they may not need to go through those extensive FTE and salary reduction calculations. So you'll see that the EZ form is available under one of three circumstances. The first one doesn't apply really to not-for-profits because you don't have owners, but the other two do. So the middle one there is that there was no annual salary or hourly reductions that were more than 25% and no reduction in FTEs. So let's say you were paying somebody $10 an hour, and during this you reduced their salary to $8 an hour. Well, that's a 20% reduction. So that does not put you in the position where you've now exceeded that 25%. So you're still okay. And if you didn't have to reduce hours, under that you're qualified. The last one is that there's no salary or wage reductions by more than 25 and you were unable to operate during the covered period at the same level. So this one says, in the example I just gave, you'd want to keep the salary at $10 per hour, even though you'd have to reduce the hours or reduce the FTEs if you could not retain the same level of business activity because of those restrictions and so forth. In those cases, then you can file the EZ form versus having to complete the Schedule A and Schedule A worksheet. So it makes it a little simplified. Here's the top part of those two forms. Pretty similar information, obviously, up on the front of here. Big difference, like we said, is those worksheets and calculations that go along with it. We've had the question come up, if you look at the bottom EZ form, the question about employees at time of loan application and at time of forgiveness. This has been, and Kate, correct me if I'm wrong here, but we've been interpreting this as total head count, not FTE, correct?
That's my interpretation. It's similar to the question that was on the original loan application, which implied head count.
Terrific, thank you. So I know that's been confusing because it's hard when the original application had head count and this has head count potentially there, or it does have it there, versus all the times we talk about FTEs. So when can you apply for forgiveness? Obviously that's the big question. So we've talked about 8-week being the original period and now extended to 24. You do not have to wait till the end of that 24 weeks, though, to use or to apply for forgiveness. If you've used up all of your funds, you can go ahead and apply. And the applications for forgiveness, both the EZ and the full form, are available on the SBA website. The one thing to consider is if you're going to have a reduction in wages. If you go through the calculations, I'm actually going to let Kate explain what happens on this one because she's been more involved with the form than I have. But this is where you want to be careful not to apply early if reduction in wages applies. Kate, you want to explain?
Sure. So it gets a little confusing, but I'll try to just do it in the simplest terms. So if you decide to apply for forgiveness prior to December 31st or the end of your 24-week period, the only reason that I would caution is if you have actually had to reduce your employees or staff's wages during the covered period. If you apply for forgiveness before the end of your covered period and you had reduced your salaries, your staff's wages. So for an example, you have an employee who works 40 hours a week. Prior to the pandemic, you were paying them $1,000 a week. During the covered period, you are now paying them $700 a week, but they're still working that 40 hours a week. So they've taken a 30% pay cut. You've now gone above and beyond that eligible 25% pay cut by 5%. If you apply for forgiveness before the end of your covered period, you will lose the ability to utilize that December 31st as a safe harbor date to restore their wages back to within 25% of their pre-pandemic wages. So in this example, if you were paying that employee $700 a week to work the same amount of time over the course of your 24 period, even if you used up the funds, let's say in 13 weeks, you used all of your PPP funds in 13 weeks, and now you want to apply right away. So you've lost the safe harbor of December 31st to reinstate them back to their original wages. So what's going to happen is, as part of the loan forgiveness reduction, you're going to have to take the difference between the 25% reduction in wages and what you've gone above and beyond. So that's the 5%. So if you've reduced your staff's wages by 30%, you've now gone above that 25% threshold by 5%. So it's $50 in the case that I'm describing. They were being paid $1,000, now they're being paid $700. So there's $50 of wages that they've been reduced above and beyond 25%. So you're going to have to reduce your potential forgiveness by $50 times 24 weeks, even though you only used the funds over a 13-week period. So you're actually going to potentially see a greater reduction in your loan forgiveness if you apply right away instead of waiting it out to see if you're able to reinstate or restore wages by the end of your cut by December 31st. So it's important to really think about what factors are going to come into play, which of course is incredibly different at this time, but there is potential that if you try to apply too early and you had to reduce your staff's wages, you may actually have a bigger impact in reducing your maximum loan forgiveness versus waiting until the end of the year. So I know that's a little bit confusing, but it's something that you want to talk to your accountant about. Again, if you have an in-house staff member that's doing the accounting, you'll want them to analyze and think about what makes the most sense for your organization.
Thank you so much for explaining that.
Sure.
And as Kate emphasized and I said earlier, this really is unique to your organization. While we can give you, again, the general parameters and considerations, you do need to look at what you anticipate and the risk that you see within your organization for potentially losing that December 31st safe harbor versus just holding out and not applying for forgiveness until after the December 31st safe harbor. Now, the advantage to doing that is it gives you longer, obviously, to reinstate the wages and you put that safe harbor back on the table, gives you greater time to utilize the funds. And if you have a portion that's still going to remain as a loan because you were not able to maximize out forgiveness to 100%, you've delayed your first payment. So all things to consider when you're trying to decide what's the best period for me to go ahead and apply for forgiveness. And the forgiveness, by the date you do it, it includes the accrued interest to the point where you apply for the forgiveness for any funds that are forgiven. So you're not incurring potential interest just by waiting, as long as the funds are actually, or the expenditures are actually forgiven, then there is no additional cost of holding off or waiting until the later time period to submit for forgiveness. Now, the big thing that we have said so many times throughout all of the webinars, and one of the favorite phrases for accountants is documentation. So this, of course, is a really important piece and comes again from the application and the documentation out there of what's needed. There are some things you will have to submit on the left-hand side of the screen with the application so that the lender, and you're going to submit this to the lender where you got the loan or who's servicing the loan, to prove that you had actually expended the funds. You are not going to submit significant other documentation to support some of those FTE exceptions and supporting documents. But you'll notice the big bold letters at the very end of this, you need to keep it all. Because one of the misconceptions was this whole idea of who's reviewing the documentation, can I be audited, what do I have to document? First and foremost, as accountants, it's always best to document and have your rationale, because it's hard to backpedal if you get a question down the road. Secondly, the information that came out around the $2 million item for potential or for SBA audit was around that certification piece. That did not trump or ignore the fact that the SBA can still audit a loan at any point and for any amount for either application criteria and or how they've incurred the funds and whether they actually incurred forgivable expenses. So not to panic anybody. I mean, it's like anything else. Your chance of audit is not necessarily significant, but you do need to have the documents in place so that if there is a question down the road, you have that in place. The other thing to consider for not-for-profits is a lot of the not-for-profits have to have an audit or a review for state funding or state purposes of solicitation. To be a registered charity, they have to file either a review or an audited statement. And that CPA accountant, as either the auditor or the accountant, is going to be looking at some of this information as well. So it's important that you have your ducks in a row and not put this on the back burner, that you go ahead and take care of this. So with the application, you're going to submit the actual payroll reports. And as applicable, now some of them may not be available depending on, again, on timing, the payroll tax filings that go with it, like the 941. The information that I read is when you have an outside vendor doing the payroll, which we suggest for a lot of the nonprofits for a variety of reasons, that external vendor's payroll report and those tax filings is generally sufficient. If you're doing payroll in-house, you may need some additional documentation available because it's not exactly the same kind of third-party involvement. You also need then receipts or canceled checks for those benefits like health insurance and retirement contributions, and the calculations to support your FTE calculations. Now for mortgage interest and lease rent agreements, those have to be agreements that were in place. Oh, and I forget the exact February day, Kate. What is it, February 15th, thank you, February 15th. That mortgage or lease has to be in place by February 15th. It's not something that you incurred after that. You would have to provide the lease agreement and proof of payment. So you'll notice these are providing evidence of the commitment as well as the actual payment for what you're supplying to the lender in reviewing your forgiveness application. And copies of the invoices related, for instance, to utilities, etc. I know one of the questions that came up was about if you pay through credit card or direct ACH, the bank statement that shows the reduction in the ACH that aligns with an invoice, or the credit card receipt and payment of the credit card statement, that's all proof of payment. It doesn't have to be paid by check. But again, the idea is that you're verifying it was a viable, forgivable expense and that the payment was made. What you don't have to submit up front is the information for the worksheet and the documentation around those safe harbors related to FTE. So if you had somebody who refused a job offer or refused to come back full-time or voluntarily resigned, those are all documents that you want to obviously still keep, but you're not submitting those with your forgiveness application. Any records that we talked about early on when we were talking about your certification for eligibility, that support that you had the necessity for the loan, those are also things that you want to keep and make sure that you have documented and available if there was questions or if you needed to supply additional information. The ones around if you cannot operate because of health standards, again, you need to document that. So we mentioned earlier, some restaurants now are not going to be able to offer the same kind of service or level of service. Those are things, again, you want to document the date that it changes and who was issuing the order and what that means to your business and operations and what level you can operate at or are restrained on. It's real important, like I said, that all of this stuff that you have is accumulated, even if you don't have to put it all with the application to the lender. Once the lender receives your completed application and documentation with it, they have 60 days to review it and submit it to the SBA for their approval. Anything you want to add before I go on to a couple other topics here, Kate?
No, I'm working to answer some of the Q&A, the Q&As about FTEs. There were a couple of questions just about making sure are there exceptions to the FTE calculations, thinking things like retirements or voluntary resignations or an employee wants to work fewer hours.
Yep. So that's a really good that you brought up retirement because that is included that I've read, correct, Kate?
Yep, definitely.
So it's not listed specifically in the ones here that were given in the instructions. So these are ones that you are not penalized for if these situations occur. That's great. Thank you for sharing that.
Yep. Otherwise, I think good to move along.
Okay. One of the big questions for not-for-profits has been, well, what if I get government money? Or what if I have other sources to cover my payroll? The authoritative document that's out there now at this point is from OMB, and they issued memo 2026, and these are direct quotes from that memo, that payroll costs paid with PPP funds or other federal CARES Act programs cannot be charged to current federal awards, as it results in the federal government paying the same expenditure twice. Now, some of you may not think about it being federal money because it comes through a state or a county agency. But your accountant is going to know, because if you have a schedule of federal awards as part of your audit or your review, you have federal funds probably coming through, even if it's indirect. If it goes through a county or a state agency, it's still a federal fund and this still applies. Based on that, even if, let's say, it was direct state money, the general consensus at this point is, although it's not authoritatively written like the OMB memo, the intent is the same, that you can't have that state or federal grant that is going to pay for and apply to the same payroll costs. So the big advantage to not-for-profits now is with the 24-week window, you can look at ways to strategize and determine how to lay out the usage of funds. And you may want to talk with the funders and look at the grant periods that you're looking at to determine when you need to maximize out the government grant funding versus the PPP. The key is that it can't be the same payroll or the same exact ones covered by both. So I have one organization that has 10 employees, and 2 of them, 100% of their salary is always covered by a particular grant. So all 10 employees are part of the head count and FTEs, but those 2 people's salary that are paid by the grant are not eligible for forgiveness. So they are not going to be included in the form submitted. When a payroll report for them is submitted, they're going to reconcile at the bottom and say less this salary and this salary that are covered by X grant. So that's going to be the reconciliation piece. The good news is that this OMB memo talks about having some flexibility to the providers as well, because the intent here is, like it's been all along, to maximize the availability of resources and utilize all of the funding to the best use that it can be for our nonprofits who are serving so many diverse areas that need that kind of resource. So the key is documentation, documentation, documentation here to be clear where that funding is coming from. The other thing to note is if you have that schedule of expenditures of federal awards, this has to be listed. Your PPP funding has to be separately identified on that list. Now, I believe in an earlier webinar, we talked about PPP funds are not subject to uniform guidance or single audit. But if you do have an EIDL loan, that is considered a federal grant for uniform guidance and single audit considerations. So hopefully that helps clarify that. Anything that's come in there, Kate, that's confusing? Because I know that's been a big topic for not-for-profits.
No, I think that I think you explained it as clearly as we can at this point. There is one question while you're talking about these items. One question in the chat: if we are to be forgiven, what is the best category? Maybe and you're going to talk about this. What is the best category for the revenue, specifically in the 990? Will it be a government grant?
Excellent question. And you know what? I don't have the answer for the 990 part of it, but I'll tell you the answer for now. And we'll keep working on the 990 answer for you because it's an excellent question. In terms of gap reporting, if you're at 12/31 year end, it's not going to really have an impact on an audited report or review report because the majority of the activity is going to happen within a calendar year. What's happened for our 12/31/19 year ends is it's basically been a subsequent event footnote. It actually applies also to January or February year ends because there were no PPP funds for anything prior to February 28th. So if your year end was prior to that, the only impact of COVID is subsequent event potential footnotes and additional information. The majority of notes that we've seen around the subsequent event are related to possibility of impact to contributions coming in or having to suspend operations, but a lot of them are not defined. So the note disclosure that goes with this is obviously highly customized to the individual organization. And in a few cases, it's been really minimal because for some organizations we've seen there really hasn't been any significant impact as a result of COVID. So that's what happens for those December, January, and February year ends. Now, if you're a fiscal year end that's March or later, you may have received that loan amount or you may have applied. And now we've got a different situation because you actually have the physical cash. So when you received that, ideally, it should have been recorded as a loan because it is a loan. Now, there's some debate over if it should be titled differently for a not-for-profit as a different type of liability. But the ultimate goal here is that it is recorded as a liability initially. So you get the cash and it's a liability. What's going to happen to that liability over time is it's treated one of two ways. It's treated either as a loan, just like a commercial entity would generally do with a loan. They would leave it as a loan and not record anything as income until the loan is completely forgiven. And then they would record forgiveness income. What's going to happen instead for a lot of the nonprofits that I've been talking to and working with thus far is they're going to do the second option here and record it as a conditional grant. because nonprofits, this is part of generally accepted accounting principles for not-for-profits, and they're very familiar with the conditional grant situation. So what that means is when they got the funds, it basically comes in like a refundable advance would for any other grant that's deemed conditional. And then we record the grant income as we meet the conditions of the grant. So in this case, for a PPP loan, the condition of the grant is that we've had forgivable expenses. So as those forgivable expenses are incurred, we can now take that portion of the liability and record it as grant income. How the terminology and specifics of if it goes within another grant line item on the statement of activities or some line items, some of that is still subject to debate and individual client circumstances. But the conditional grant treatment seems to make the most sense for most of the organizations that are March year ends or later, because they have this overlap, and it then represents the closest equivalent to as if business was uninterrupted and shows that flow of resources. Questions on that, Kate?
No. There are some that we'll probably respond to in a little bit more detail as they're a little more specific to people's situations, I think.
Okay.
But for now, no.
Okay. So hopefully that helps you understand a little bit, because I know for nonprofits, that's been a big piece of it. I mean, obviously applying for the forgiveness is significant, but for a lot of nonprofits, you've also got grant reporting and other financial reporting that you have to do here in the interim, and it helps to understand how that's going to apply as well. Now, there are a number of resources that are available on our website, as well as obviously the SBA, which is where you would find the actual forgiveness applications, either the full form or the EZ form. And then the AICPA also has a number of resources that are available. So I am going to turn it back to Kate for questions and or anything that she wants to add that I missed, because she's been more in some of the details than I have on certain pieces. So I'm happy to have her input anything I might have missed.
Sure. So why don't we go ahead and maybe look at some of the questions. We've got quite a few questions that folks have submitted. So maybe we can, since we've got some time left, we can answer some of those live. Got one question in the chat that said, we received funds through county and state from CARES. So it is taken away from the amount we can forgive if within the 8 or 24 week period or at all. I'm not sure that I totally, are you following that question, Melody?
I think so. So if you have funding from a Dane County source, you cannot during the 8 or the 24 week period, whichever one you're using, use those Dane County funds and the PPP funds to cover the same expenses. So you may want to talk with, again, your in-house accountant, treasurer, advisor, us if appropriate, about how you want to allocate those funding and which should take priority depending on the terms of the contract. But you can't pay things with Dane County funds and PPP the same funding. It has to be 2 separate expenditures.
Thanks, Melody. Maybe this is a question you can answer live, or we may have to respond after. We've got a question regarding housing allowance. So how do you handle documentation of pastors' housing allowance that is not reflected as gross income on 941 quarterly reports? Is the payroll
Excellent
journal
question.
enough? Yeah, is the payroll journal enough to prove that housing is part of gross wages?
Yes, and it's been very clearly stated in subsequent guidance that housing allowance is included. Ultimately, if it came down to a timing and you applied later, it's potential they could ask for a W-2 for documentation related to that, because it is reflected on the W-2 even though it's not on the 941. The other key document here, though, is a viable housing allowance has to be approved before it is utilized or considered compensation. It has to be approved by the board. So those minutes and approval is a key piece of that as well.
Another question about documentation. So do we need to submit or just maintain requests to voluntarily reduce hours?
Just retain. You don't have to prove all that, correct, Kate? I mean, that's
correct.
Supporting Schedule A and any questions that come up. But lender is not going to be interested in getting in the weeds. That one is the best way to say it.
Yep. All right, Lisa asks, our payroll tax filings, 941s, are filed quarterly by a third party. We will finish expending the loan funds by mid-July. The quarterly tax filing would happen in October of 2020. Therefore, do I need to wait until after that filing to apply for forgiveness? At this point, the guidance states no.
Okay.
You would be able to apply now. I agree that it is misleading that they want the quarterly reports that include your covered period. So that your lender won't let you apply yet, but the guidance states that you can apply as soon as the funds have been utilized. And you would still be required to submit payroll reports that substantiate all of your calculations. So if they don't have the quarterly filings at the time of your forgiveness application, you would still have all of your payroll reports that you would be submitting as well.
Yes, I recall, if I remember the terminology correct, and one thing I read around those 941 reports is the ones that overlap directly. It implies that ones that are available and related to it, not that you have to withhold or wait on forgiveness because of the 941 submission.
We have a comment in the chat that said First Business Bank's last letter said they had not yet received guidelines on how to submit to SBA and were developing the system to upload files. So that's a great point to make. Obviously, before you start doing anything, you'll want to check with your lender. I would assume that First Business Bank is not the only one that is probably not even accepting these forgiveness applications yet, since they, just like us, are in the same position waiting for changing guidelines on a daily basis. So my guess is most banks are not quite yet in a position to even start accepting the applications. But for many of you where you're going to have to do some of the calculations, if you started on those, hopefully over the next few weeks, banks will be gearing up either with online portals or ways that they'll be able to accept paper documentation if needed or electronic documentation so that they can be prepared. But as always, we've been recommending since day one, just make sure that you're in contact with your lender because you're going to have to work with them in the process to submit the application. So if they're not ready for it, there's not much you can do besides be prepared for when they are ready to accept it.
Excellent point. And while I referenced the SBA website for the applications, you can download them and look at them, but to Kate's point, banks are not going to be taking the paper forms. So just be aware of that and don't duplicate your efforts here, but you can get, there's nothing preventing you from getting a head start on doing those initial FTE calculations, or if you're not going to be able to use the EZ form, doing some of the back work that has to be done for the worksheet and Schedule A.
So one person commented in the chat, it's the federal taxes that are able to be forgiven, not the state ones, right? So I just want to make sure that everybody's clear on the eligible payroll costs. The eligible payroll costs are the gross salary. So the gross salary includes any amounts that the employee would have withheld from their paycheck. So that would include their federal withholding, state withholding, and their portion of the Social Security and Medicare taxes. For the employer side of things, the only eligible payroll costs are employer paid state and local taxes. So federal unemployment is not eligible payroll cost, and the employer's portion of Social Security and Medicare is also not an eligible cost. So essentially anything that's on the 940 on your 940 annual filing, or the employer's portion of the 941 filings are not eligible. Only the employee's portion, as well as the employer paid state or local, think unemployment tax, state unemployment tax, that's an eligible payroll cost.
And an interesting thing just to tag on there for not-for-profits, some of our not-for-profits use a reimbursable employment method. So you do not have a tax that's deductible here. And local taxes for some of the municipalities where you have local city taxes or additional state kind of taxes, those can apply if they are employer imposed.
So another question, if someone wants to apply now, is the process the same as the original application? So like we just mentioned, you'll always want to be in contact with your lender. The new applications came out on June 16th, and so far they haven't been updated since June 16th. So those would be the ones that are the most recently updated and available to use. However, you'll want to ensure that you're using whatever your lender provides you. And my guess is many of them will have online portals set up that have most of the same information that's on the application itself, or just an electronic version of those forms. So you'll just want to make sure that you're staying in touch with your lender. But there is the standard form and the easy form.
Kate, have you seen anybody who's actually been able to apply? Because I know I've had the questions, and given changes, the basic advice we've been getting is take a deep breath and wait, because there's not a pressure that you have to do it this minute.
Yeah. I haven't seen
aware of anyone that's actually been able to apply.
No, I haven't seen that as well, and I haven't heard from any of our other coworkers at Wegner that anybody has successfully applied at this point. My guess, again, is that the banks are also holding off. They would be remiss in updating their systems before they felt comfortable with where the guidance was at, and with everything, all the new information that we got in this last week. I'm sure they're still waiting even for a little bit more information, because there is still some items that we're waiting on clarification for. Our expectation was that we were going to see a whole lot more frequently asked questions that the Treasury posts, and we have not gotten those yet. So I thought that we'd have them for sure by June 30th, and here we are. It's July 1st, and we don't have them.
I was reading something that said, are they ever going to answer the transportation question?
No, they're not. Or the health insurance. I know that was one question that was asked in the Q&A. You know, at this point, there are actually not any clear guidance on what exactly is included in the employer paid health insurance costs. One of the questions asked is disability included? I have not seen any guidance that states specifically that disability is included. Our best guess right now is medical, dental, and vision as health insurance costs to the employer. No others at this time. Workers' compensation is not included. We don't see disability or life insurance included at this point. But those are really open-ended questions, because there is not a clear definition of health insurance costs at this point. So, all right.
Any other questions?
There's one more in the chat. We have qualified exceptions on FTEs. Can we still use the EZ form?
My understanding is yes. Correct, Kate?
That's my understanding as well.
Because they didn't reduce it. I mean, if you have an exception, it's considered as not a reduction because it was beyond control. Therefore, it wasn't a reduction. And yes, you can use the EZ.
Yeah. Just again, a reminder that you should, if you can, have written documentation. You will not need to submit that to your vendor, but if anybody asks the question, you want to make sure that you have it ready to go and available. So if you can get written documentation, you know, signed by the employee, signed by the owner or manager of the business, so that you have that on file and ready to go, I would recommend that.
Excellent.
Wonderful.
We really appreciate everybody who takes their time to attend these. Just a couple of things, obviously, as the training and career development manager, ongoing education and being able to have these conversations is huge to me. So I'm always open to ideas that may be helpful to you, because we want to make sure that this is something that adds value for you. And that's why we're here, to be advisors and to help you. So please don't ever hesitate to reach out to me. And we will respond. I will respond to the Q&A questions, but both Kate's and my contact information is given there. If you have any subsequent questions, please let us know.
Yes, thank you both so much, and thank you all for attending. You will receive the presentation from today and a recording of the webinar. So thank you all again for your time. Thank you, Melody and Kate. Have a wonderful rest of your day. Thanks, ladies.
Emily,
Thank you.
can we make sure that anybody, there are a few questions in the chat. Can we just remind people to throw those in the Q&A so that
Absolutely,
we can...
yes. Please make sure that if you have a question that wasn't answered today, to put it in the Q&A feature at the bottom of your screen. Those are the questions that we will be following up with. So we'll give everybody a little bit of time just to copy that over to the Q&A and not the chat. We really appreciate that. It just makes it a lot easier on our end. So thank you, Kate, for that reminder.
Thanks, Emily.
Yes.
And everybody have a safe and wonderful 4th of July holiday. Definitely will be a little different this year, but
Everything's been a little different this year, so.
exactly. We're learning to go with the flow.
Absolutely. Thank you all so much again. Thanks, ladies.
Thanks.
Thanks.